In this video, I'm going to share with you a simple but powerful strategy that you can use on your chart to make $50 per day. I'm going to guide you through the rules step by step and show you the entry point, the take profit target, and the stop loss. This strategy can be applied on any time frame and on any pair as far as trading is concerned. So if this is what you like, watch this video all the way to the very end. Consider supporting this channel by leaving a like for this video, subscribe if you have not, and turn on the bell notification for more forex videos like this one. Also check the channel for other forex content. $50 per day trading strategy. This is very important. And the first thing here is, let me guide you through the rules and what you should be paying attention to if you want to use this very strategy. Very powerful. The first thing here is the rules, and the first thing is trend identification. So you must first of all, either the market is in an uptrend or the market is in a downtrend. Once you define the market trend, then the second thing we want to check is resistance and support level. Okay, I will show you that, how to check it on your price action. And the next thing is the stochastic RSI at overbought and oversold. We want to make sure that the stochastic RSI, which we will use to gauge momentum, is at overbought or oversold. Okay, these are the rules. And the last thing here in the rule is the Fibonacci retracement tool have to retrace to the 0.50 and the 0.618. That is only when we want to take the trade. So these are the important rules. I'm going to show you right now how to carefully apply it and what should make you trigger your trade, that is your entry. USDJPY 4-hour chart. You see, these markets have been moving upward from here. Market come back down and to this very point, impulsive move. Within this very area, we see that the market changed direction. And from this very point, we can begin to say that the market is going to come back down. Why? Because market moved down, retracement moved downward, and then this is retracement. Market is going to continue all the way to the downside. So rule number one is trend identification, which is here. The second thing is resistance support level. We want to check the level of support and resistance. And if you look at it, this very point is a strong resistance here, resistance at this point, which is support at this very point. So it aligned with our rule number two. Okay, so this very point of support, we have support here and resistance at this point, resistance at this point. So rule number two is met at this very point. Then the third one is stochastic RSI at overbought or oversold. So since the market is coming back down, okay, we want to ensure that the stochastic is at overbought condition. Okay, market has overbuy, which means market is going to come back down very, very soon. And if you look at this very point, that is what we see, market at overbought condition right here, and also at overbought at this very point as well. So what we want to see right here is the next rule, which is Fibonacci retracement between the 0.50 and the 0.618 on the Fibonacci retracement tool. So what we will do next is to draw out our Fibonacci retracement on our chart. And once we do that, we go here, pick the Fibonacci retracement tool, and then we draw on this very impulsive move. Okay, so we draw from this very point downward. Okay, so at this very point right here, you see that the market at this very point did not enter into the 0.50 and 0.618 because this level is within this very point. Okay, I want you to apply this strategy very, very well and strictly, because once you follow that, you will have the right entry pattern. So from this very point, we will not take a trade here, okay, when the market was coming out of this overbought condition. Why? Because the market did not enter between the 0.50 and 0.618 on the Fibonacci. But if you look at this very point, that is when the market entered into this very area of overbought right here. It is called that the market entered into the 0.50 and 0.618 at this very area. Okay, so this is the one we would take and not take this one. Why are we paying attention to this very Fibonacci level between the 0.50 and 0.618? It is because when market retrace very well, it means that the market also have capacity of moving all the way to the upside. And most time we see that best retracement for the market is always between the 0.50 and the 0.618. So these are the two areas we are paying attention to in this very strategy. And that is why we will take this very one as a trade signal for us and not this one, because it does not align with rule number 4. Okay, so we want to follow this rule strictly to ensuring that we enter the right trade. And having fulfilled that with this very setup right here, we're going to enter this position from here all the way to the downside for a sell position for market to come back down. So from here, we want to wait for the stochastic RSI to come out of the overbought condition, and the market should come back down. So your entry strategy is very simple. What you have to do to enter, that is to trigger a trade, a sell position in this very case, is that you have to ensure that this very first bearish candle close below the last bullish candle. Look at it right here. This very bearish candle right here should close below the last bullish candle. What that means is we want to ensure that there is a bearish momentum coming into the market. Once that happens, we want to consider executing our trade. Look at it right here. So that happened at this very point. So at the formation of this very candle, this is where we want to take our position, okay, and see how the market is going to go. And your stop loss have to be slightly above that resistance at this very point, and your take profit target have to be 2 times your risk. So I will go here and take my short position 2 from this very point, and then I will place it right here because that is where my entry have to be. And so my stop loss have to be slightly above this very resistance right here, okay, and then my take profit target have to be 2 times what I am expecting, okay. So my take profit target have to be this very point, okay. So if you look at it, this strategy perfectly align with what I am talking about right here. So the trigger is at this very point on the second bearish candle, and if you look at what the market then did, discover that market come back all the way to the downside, okay, in line with what we were looking at. So this is a very important strategy you can apply and make $50 per day, and it work on any time frame. You can as well say, okay, let me not do a day trading, okay, let me do swing trading using the 4-hour chart as I'm doing right now, or you can also use the 15-minute chart or the 30-minute chart and do your day trading with it. This is a very powerful, important strategy you can apply right now. So you can see that in this very position, we take the trade at this very area, okay, on this very candle. After the close of this very first bearish candle, the second bearish candle is our entry position, and the market move down, come back up again to retest the position, and then come all the way to the downside. And this was a perfect trade scenario for this very strategy. You must follow all the rules and ensure that all the rules is intact. And what you're using to enter is that you must ensure that this very candle, this bearish candle, have to close below the previous bullish candle, which indicate that momentum is now in the market. The next example here is this very trade pattern right here. If you look at this very chart, you see the market move from here, okay, all the way to the downside, and then we have retracement. So we want to confirm whether this align with our rules. So the first thing here is the trend, which is the first thing, which is market is going down, and the second thing here is the resistance and support. So if you check this very area, this is resistance right here, which is resistance at this very point, and support at this very area. Then the next thing we want to check is this very one, which is the third one, stochastic at overbought condition. If you look at this very point, the stochastic is at overbought condition at this very point. So at overbought condition means that market have capacity of coming back down. And then what we want to see next is the Fibonacci come to the 50 and the 0.618 level. So what we want to do now is to take our Fibonacci retracement 2, and then we'll draw it back down. So from this very point of impulsive move all the way to this very area, okay, and once we see that at this very point, you see that the market move upward into the 0.618, okay, approaching the 0.786. So from this very area, we are very sure that the market is going to come back down. But one more thing that we need to check out for is that we want to ensure that the markets close below the previous bullish candle, which occur right with this very candle. See this candle move down. We're not going to take the trade. Why? Because this very bullish candle goes upward and market have to close below this very bullish candle right here. So it is this very candle that did that job for us. So the last bearish candle is the one we're going to take our trade on. So market come back down to this very point. This is where we're going to take our trade on this very last bearish candle. Okay, so once you do that, you can take your trade knowing that everything is now in check. And what we want to do right now is to take our sell position 2 or our short position 2 right here, and then we place this at this very point. Okay, and our stop loss have to be slightly above this very point of resistance, and then our take profit target have to be right down, okay, 1 to 2 risk reward ratio. If you look at this very trade, discover that market move up a little bit, okay, and market begin to come all the way to the downside. This is a super good entry position right here. And if you draw it to the downside to reach the 1.2 risk reward ratio, discover that market still went all the way to the downside to this very point. So this strategy is very, very simple. The next example here is on Euro USD 4-hour chart for a buy position. The first thing we want to do is to identify the trend. So if you look at this very price action, discover that market was coming back down, and from this very area we discover the market begin to move upward. So what we want to do is to ensuring that we are in the direction of the trend. First thing first. And if you look at it, market move upward from here, okay, upward, the market come back down, the market move upward again, which means after this very retracement, market is going to move upward again. So what we want to do is first thing, the trend identification, which market is going up right here. And the next thing is the resistance and support. If you look at this very point right here, this was support right here. We have resistance at this very point and support at this area, support at this very point. It discovered that it aligned with rule number 2. Rule number 3 is to check the stochastic RSI indicator. At this very point, discover that the stochastic RSI is at oversold condition. So at oversold condition right here mean that the market have capability of moving all the way to the upside. So what we want to do is to ensure that this very stochastic RSI come out of this oversold condition, crossing the 20% line right here, okay, and then we want to enter a trade. The last thing on this strategy, just like we see right here, is the Fibonacci retracement, and that retracement should be between 0.50 to 0.618. So we'll go here and take the Fibonacci retracement to draw from this very point to this very area. And if you look at this, it is called that the market retrace into the 0.50 at this very point to 0.618. So the retracement is between this very point right here and this very area at this very point. Okay, so from here, market have capability of moving all the way to the upside. So now that all our rules have been made, the next thing we want to see is our trigger. And for us to trigger any position, we want to ensure that this very bullish candle close above the previous bearish candle. Look at it right here. This is the last bearish candle right here, and we want to ensure that this very bullish candle close above the previous bearish candle right at this point, and that's aligned with the first bullish candle at this very point. So what we want to do is to take our long position 2 at this very point. So we enter the position right at this very point, at the close of this very bullish candle, which is the beginning of this other bullish candle right at this point. So we take our long position 2 from here, that is our buy position from this very point, and place it right at this very point. Our stop loss have to be slightly below our support level, and then our take profit target have to be 2 times, okay, our risk. So if you do that and see how the market move, you see that the market move down a little bit, okay, and from here market begin to move all the way to the upside. Look at it right here. Market to move upward and hit our target right here with a 1 to 2.91%. Okay, so this is a very huge strategy you can apply right now if you want to be in the right direction of the market 80 to 90% of the time. One thing very important on this very strategy is that it's not a holy grail. You will encounter loss in the process, but if you follow the rule very well, it is accurate 80 to 85% of the time. And if you do this, you're going to be making $50 per day with this very strategy because it works on any time frame. And this is what you need to do right now. If you gain value from this very video, consider supporting this channel by leaving a like for this video, subscribe if you have not, and turn on the bell notification for more Forex videos like this one. Also check the channel for other Forex content. Join our Telegram channel, the link in the description and also in the pinned comment. Thanks for your support.